Test, test, test. Okay, there's sound now. Sorry, guys. So there was completely no audio. Still no audio. Give it a second. Give it a second. Wow, that is very strange. Is there audio now, guys? Hello? Hello? Test, test. My mic seems to be working at the moment, guys. Can you all confirm is there audio? Hello? What the hell? Hello? Okay. All right. So sorry for the technical issue, guys. Okay, as I was saying, in this particular episode, we will be covering crypto trading and investing, right? And it isn't exactly a 101 guide, okay? It's a very good reminder for most folks on how they should approach this market. So what I will be covering or encompassing is the risk profile of each individual, right? Or how we categorize it here in CG Protégé, because CG Protégé is our group where we look and discuss about cryptocurrencies, how to trade, how to invest, and we also cover forex and news. So that is in our Discord. If you're ready to get started, the link is in the description below. But let's cover this tutorial first. So risk profile is something that's very important. So in this episode, right, let's cover the overview of the episode first, so that those who are here today, they know what they are going to learn. So risk profile. Okay, risk profile is basically what is your personal risk appetite before you start investing or trading in crypto. The next thing is the security aspects when you're using an exchange, and how you should set up, what are the best practices when you're trading your cryptocurrencies, what are the best practices when you're storing your cryptocurrencies as well. And we will get into a few trades that I have done, and I want to give you some examples and my thought process on why I bought those cryptocurrencies, why I trade those cryptocurrencies. Now, just a full disclaimer, none of whatever I'm showing you on this episode is meant to be financial advice. It is purely for educational purposes. And like I said, if you are going to look at becoming really serious about investing and trading in this space, naturally we have the Premier group or the Protégé group where you can fully learn all these things. At the same time, we already have a free course on Udemy, right? So and you can just you can join us in our Protégé. From then we will give you the link. You can go and look at it. We have a basic course and the advanced course. So it helps us a lot, especially when we are creating content for this channel. It helps us out, especially when you buy our courses. It's well edited, it's done professionally, and definitely when you're sitting through it, you're going to be really not only entertained, but you're going to learn a lot. Especially we have already 3 years of experience in the space, and at the same time we have clients that are also consulting with us when it regards to their portfolios. So I feel that course alone already will give you a lot of benefits, right? There's, I think, a total of 18 over hours of content in there, and definitely each episode was meant to teach you on how you're supposed to approach your personal portfolio. But now let's get into the episode, guys. So firstly, let's cover your risk profile. Okay, risk profile is something that a lot of people never understood prior to me entering the space. Okay, and I think this part was overlooked because a lot of people, right, they have never been exposed to crypto before. So when they stepped into this space, they have never invested in any other asset classes. That means stocks, bonds, mutual funds, and they were never having an access to a financial advisor. Now, financial advisors are licensed to go through a financial needs analysis with you, or we call it F&A. It may be called something else in your country, but it's a financial needs analysis. So in this financial needs analysis, what does it consist of? It consists of knowing your age, your annual income. It involves what kind of assets you have, what kind of investment experience you have. That means, as I mentioned, what have you done before in the traditional financial markets? Are you a trader yourself? Do you have existing assets with other banks or any other financial institution? what is your current time horizon and your financial goal. So your time horizon is pretty straightforward. It just means that how long are you willing to hold in a particular investment before you decide to exit, you know, stuff like that. And then when it comes down to when it comes down to your wait, what's the last one? Time horizon. The next one is yes, your financial goal. So your financial goal can range anywhere from saving up year-end holiday to buying a big ticket item, for example, a home, or you plan to have a nest egg of an X amount for retirement. Usually it's very specific. There are certain life goal chapters, for example, saving up for a wedding, or you are saving up for your kids' education. It usually falls under these categories, or your own personal education. So it falls under these categories, because when we talk about financial needs analysis, we don't talk about random stuff. Holidays are usually not a need. So we always have to identify what is the client's financial need. Okay, so whenever we also have strategies. For example, we look at growth. Okay, we look at growth and we look at dividend plays. All right, can your portfolio consist of both? Sure, you can. Give me a second, guys. There seems to be some noise coming out from the home. All right, so okay. All right, so as I was saying, so you, after identifying your after going through this financial needs analysis, right, from there you are able to identify your risk profile. Okay, so your risk profile usually falls under a few categories: how experienced you are, how much financial liquidity you have, and at the same time, I think your savviness with regards to your approach towards investing plays a large part on the amount of risk you're willing to take for that amount of return. Okay, so when you already start to identify your risk profile, you fall under three categories: low risk, which is conservative; after that you have moderate risk; and then of course you are high risk. Okay, now a lot of folks do not know how to even categorize the crypto asset class, and let me just give you the full definition. Now there seems to be quite a bit of resources that are already covering crypto, that give them ratings and whatnot. Now take note that these ratings are on a few things and nothing to do with risk. It falls under their development, what kind of team dynamics they have, what kind of purpose does this particular technology serve in the existing ecosystem, and also I'm not sure whether they take into account the time frame that it has been around. So all these things, right, are really very irrelevant for investors like us, because right now if I want to invest in a particular cryptocurrency, it doesn't mean that technologically these things are happening on this particular project. It means that the risk is lower or higher. To me, I look at time. Time is one of the best factors to look at a risk. For example, to determine risk. I'm sorry. So property in your country. Let me lay it down very simply. Property in your country should usually be the most stable, because it has to cater to the citizens. Or whether your country is more governments building properties for the citizens, or private companies building properties for the citizens. At the end of the day, it just is based on the time horizon that your property market has been around, and also based on your population density, and at the same time how much land is available. The more land that is available, okay, for your country, naturally your property prices will not be so crazy. Of course, naturally in city areas, property prices are more insane, because that's where the hustle and bustle is all about. The infrastructure in terms of transportation, amenities are better in the city area as opposed to the outskirts. Okay, so therefore most people tend to be able to afford outside of the city and drive into work. Okay, hence you always have your jams and whatnot, hour to work, hour back, that kind of thing. Okay, so this is a good example. And as usually in the more mature or at least first world countries, naturally property prices are astronomically more expensive. Here in Singapore, we don't have much land at all. In fact, we are considered an island. Even the outskirts are already close to anywhere from 300,000 Singapore dollars to a million and above in terms of property. We're talking about the outskirts here. We're not talking about the city center. Okay, if you're talking about the city center, you're looking at anywhere from 2,000 per square feet to even 3,000 and above per square feet. Okay, so it's pretty crazy and expensive here. Just to give you a ballpark figure, I'm not staying anywhere near town. My property is now worth 1.8 million. Okay, that was something that I purchased 15 years ago. Okay, and that was at 470,000. Now it's worth 1.8 million. See, so I'm nowhere near town, guys. I'm 20 minutes drive away from town. If I take a train from my home, it takes about half an hour. Okay, so I'm nowhere near the heart. All right, but I'm just letting you know this is the reality. So so after giving you that example, when you want to start investing in this space, it's a highly speculative market. Okay, so when you step in, immediately tell yourself this is a high risk sector. Why should you even dedicate any funds to crypto? To a lot of I've been having this debate with bankers, and usually bankers, folks who are in traditional equities, they're more mature and obviously they have much bigger portfolios. Okay, multi-million dollar portfolios in businesses, property, of course, and they really don't see the need to invest in crypto. And why I sometimes can relate, because tokens are not equity. Okay, I repeat myself, tokens are not equity. You have zero intrinsic value to even hold tokens. Okay, tokens are so-called the fluff word, and they were trying to validate why people should even invest in their project. And this was the part that was the most challenging to overcome. And after a while, right, only a few cryptocurrencies could actually provide and sustain their value over time. Okay, so at the end of the day, when you invest in equity, for example, a stock, you are having a piece of that company. Whether it was in the early stage or when it got listed, you still own a piece of that company. Whether is it for the purpose that you are looking at the long-term growth of the company, or you're just holding it for dividend payout. That is the only reasons why you even buy, because there is an expectation of a return. In crypto, a lot of the ICOs were trying to weed their way out of the being deemed as a security, but they still had to compensate the users with they need to compensate the investors with certain incentives, right? Because why would I even bother to exchange from fiat to BTC and then from BTC to contribute to your particular so-called next level project that will be better than Bitcoin, better than Ethereum, better than whatever. Okay, so when people started to realize, okay, or at least projects started to realize, if I don't give these people something, no one's gonna come in. And so you have mining, you have airdrops. Okay, so mining and airdrops are so-called another way to incentivize. So miners, obviously, whether you're a virtual miner or you're actually a hardware miner, you will actually be dedicating either your computing power. That means let's talk about virtual mining first, not to confuse anybody. Virtual mining, obviously, you're just staking your tokens on a network wallet, right? So there are already risks involved there. Firstly, usually the network wallet, you have to download that software and run it on your computer, and obviously you're giving access to you're obviously giving access to the software. Okay, and usually there will be a disclaimer that this is non-proven. Okay, it's non-proven that it will work. It's still in beta. They will always have that disclaimer, so read carefully before you decide to do virtual staking or virtual mining. Now, when you stake your coins, after you have purchased those coins, either during the ICO phase or on an exchange and you decide to stake it, that means you have the intention of supporting the network in some way. You're dedicating computational power. That means you're not going to turn off your computer. Now, obviously, there are certain cryptocurrencies that say that, oh, you can stake coins without leaving your computer on 24/7, which I find highly bullshit. Okay, that it doesn't make sense, because for a network to function on a 24/7 365, you need to have dedicated computing power. So obviously, these wallets are actually just ways of rewarding my investors. There is still a 24/7 computing power that is on a centralized basis. It's a server or whatever that exists outside of whatever you know. Now, if you talk about the Bitcoin network purely functions on mining power, hardware. Okay, and these mining hardwares usually don't turn off. They are 24/7 running. Obviously, these farms these days own multiple miners. One miner can go down, that affects the hash rate for that particular that affects the hashing power dedicated to the system, but overall it will not cripple the network, because Bitcoin network is still the largest crypto network right now, or at least the blockchain. Okay, so miners are obviously incentivized for sustaining the miners are obviously rewarded in a few ways. One, they process transactions, so they will earn a transaction fee whenever they help you process transactions, right? Because there's so many transactions that happen on a daily basis. So the next thing is creating blocks, because as the blocks become full, because one block is anywhere from, if I remember correctly, is anywhere from 1 megabyte to up to 8 megabytes, depending on what blockchain it is. So if it's 1 to 2 or something like that, naturally you're going to have the blocks fill up very quickly, because everything is written on these blocks, right? The moment a transaction is processed, it's written on the block. Then after that, the block gets full, you need to create a new block. So any miner that successfully finds or creates a new block, right, will be able to reward the current reward of 12.5 Bitcoins. Now, the halving will happen next year, or at least anticipated to happen next year, where the mining reward drops. So I'm sharing with you the incentive here on why Bitcoin price even borders or speculatively will kind of go up, nearing to it. Now, this is historical. It doesn't mean that it will definitely go up, but this is historical. Every time nearing the halving, it tends to move upwards. So it can be whatever price, because right now it is a highly speculative market. So take note. So let's go to the type of risk profile. So after you have determined your risk profile already, okay, you know that you're going to dedicate a certain amount of money. You want to start investing in this space. You want to take it seriously. So I would never ever recommend anyone put in more than 1% to even 5%, no more, 1 to 5% of their overall assets, right? Now, this is not a recommendation. This is just personally what I tend to do, right? And my clientele, when they are stepping in, I do a proper full fact find on what kind of risk appetite they have, even before we discuss. So right now, this is just a general thing. It's not meant for you in particular. It's really meant for how I approach it. So I don't use more than 5% of my overall liquid assets, because I have property, right? I have a gold, right? I don't have any stocks at the moment. I have crypto. Okay, so all these things, and of course I have my business. So naturally, these are things that are generating revenue for me, or in terms of I already have that liquidity for me to work in this space, or at least invest in this space. So full disclaimer, I'm not someone who has zero money coming in or have little money coming in. But if you're coming in with little money, it would be best to watch this tutorial in its entirety first before deciding what you need to do. Okay, so that being said, usually I look at 1 to 5% of my overall liquid cash. Liquid cash is basically fiat. That's it. Okay. And you can also look at, some people say that, oh, I'll put some of my side hustle money in, money that I don't need. So same thing. I put in money that I don't need, because this space is highly volatile. When markets were great, everybody just started to pile in and put in more. I'm sure you are starting to see stories surface on how people lost everything. They didn't get out in time, you know, they were caught up with all the euphoria. So that is why I'm doing these tutorials right now and making sure that anyone who joins our Protégé group is going to be well informed and well educated and how they should approach each and every single investment or each and every single trade. Because you don't want to do it later when the euphoria kicks in, everybody will ignore whatever you have to say. And the worst thing is that none of the YouTubers, right, are qualified enough to even give you this kind of advice or even have the experience to do so, because mostly they are traders or they got lucky. Okay, traders are fine because at the end of the day, if they have a certain level of trading experience from forex, options, you know, stocks, okay, they are teaching you and teaching you based on the risks, how to do trade position sizing, which is what we do as well. Okay, but when you talk about investments, it's a whole new ball game. Okay, it's a whole different animal, and the way you approach it in crypto, I guarantee, is very, very different from traditional investments. So take note. Coming into this space, don't dedicate too much. Okay, 1 to 5% is something that I'm doing at the moment. If that is a ratio that works out for you, so be it. Now, why only 1 to 5%? As I mentioned before, none of this is equity related. Okay, right now there's no securitized version. There's no equity related version of crypto. Will that happen later? Perhaps. Are there already folks that can purchase STO tokens or security tokens? Sure. But after they validate your accreditation, unfortunately, you might not be able to participate because that's a whole new animal, being that you have to be AI or an accredited investor. So what is a definition of an accredited investor? You earn 300,000 in terms of annual income, or you have a 1 million liquid assets excluding your property. Okay, so that's what it means. So if you don't fall in that category, and accreditation, it depends on how strict they are. Some are strict enough that they would require you to get a lawyer letter stating your accreditation, or a letter from the bank stating your who you claim you are. Others that are not so stringent are going to just base on your declaration. So once you declare, it means that I'm an accredited investor, I'm fully savvy, and I understand and admit to the full risk involved in this particular investment. So that's what it means. So I highly suggest that you be very honest when you're participating in all these things, because nobody wants to handle crybabies. Okay, in this space, in this market, in any financial market, nobody entertains crybabies. So that's why you have to be fully aware of what you are getting yourself into before you decide to trade or invest. Okay. Now, let's cover the exchanges now. Now, I've already covered that aspect of risk. Obviously, there are many, many levels. I don't want to cover that. That can probably take another hour by itself. So let's cover the usage of the exchange. When you decide on an exchange, please, for the love of God, okay, please do full verification so that you don't get caught up in the event that if your portfolio grows, okay, you are not able to cash out the full amount. Do full KYC, guys. Be transparent, because right now, unfortunately, don't try the anonymous shit, because at the end of the day, if you want to continue to enjoy the facilities of the exchange, credible exchanges will not have you start withdrawing and then they don't know who you are. Okay, no exchange, right? No credible exchange wants to forsake their operational license in that country. It is money making. It is a multi-million to billion-dollar business for them. They are not going to jeopardize their so-called transparency for you. Okay? Cut the privacy thinking. There's no such thing as privacy. You want privacy? Focus on OTC. That means you transact with anywhere from a third-party individual. That means if you want to cash out, that means you trust that person completely. You're willing to send over the crypto, the Bitcoin or the Ethereum over to this person that you may or may not have transacted before. And then after that, in best faith, this guy is going to deliver cash to you, or he's going to wire you through a bank account. I don't know whether you want to do that, but I don't want to do that. So for me, I verify my accounts. I'm full verification so that I can do any withdrawals cleanly and completely from the exchange. Okay, so that's covered. So right now, apart from that, security wise, never ever trade on a free Wi-Fi. Okay, never connect your trading account to a free Wi-Fi. This is all, by the way, in the free course. Okay, all in the free course. Whatever I'm saying is all in the free course as well. Very basic stuff. Never go to a Starbucks, free internet cafe and start trading and thinking you're a baller. Because the moment someone catches you, okay, a hacker catches you, they'll intercept your signal, and from then they can even create a website or an opportunity that can trick you into logging in. And once they have your full login, all right, they are able to access your account. Now, there are certain safety features. For example, you can set up a 2FA, or they call it the second two-factor authentication. Two-factor authentication. Does it really help? Well, obviously you have to secure your Google account, or you have to download an OT. Now, none of these things, by the way, for the security experts are proven. No, you can still get hacked, but at least you create multiple layers. Now, the next thing is an SMS authentication. Now, obviously, there is the SIM swap. Don't worry, I've been around, okay? So the SIM swap naturally is something where, okay, usually they will send a code to the mobile phone. When they send a code to the mobile phone, at least it gives you another level of verification. Now, all these things can happen, obviously not at login, but for withdrawal. The last one is the third and final authentic security layer is the email, where you have an email that will be sent to you, and it will have a code again. So the highest level of security, which is another one, is just white label address or white label IP. You can have up to 5 levels of security. So a strong password, okay, that is alphanumeric, right? That is usually more than 8 or 15 characters will be good. That's the initial login, right? But however, like I said, this is all best practices. That's why I never trade outside. Okay, I've always been trading from home. If I miss a trade, I miss a trade. It's not gonna kill me. Okay, so I'm always trading from home. I have white labeled my IP address. I've white labeled the address that I do withdrawals to. I have two-factor authenticator. I also have a very strong password, and at the same time, I make sure that I receive an email or a SMS when I'm doing withdrawals. Okay, so all these things have to be set up first. So after you have done your verification and you set up your security already, make sure whatever that you're using in terms of your email also is secure, guys, because the moment the hacker gets into your email account, all these things are screwed already. Okay, so it doesn't matter. Like I said, you could also be downloading. That's why be very careful and turn off, especially if you're in Telegram groups, right? Turn off the auto media download. Okay, just turn it off, because you never know what could be in that shit, right? And that's why we have the Protégé group, because everything, whatever we share, is internal. You have direct support from us, the CG team, that just in case if anything outside, okay, that's not from us, okay? But whatever that is within our community, right? And since we already have such an extensive network of information, most of the stuff we share is from us, okay? We don't give you shit and then after that suddenly there's an issue with it. We always at least validate first before you even download it and take a look. So always be very watchful where you're getting your information from, especially if it's from Telegram. At the same time, don't forget there are people who are always coming into free Telegrams that are always giving out free shit. Those are the spammers. Be very, very careful. Information, although it's free, but it comes at a cost. It always comes at a cost. Never assume that it's free. You're always compromising something or you're giving away something. Okay, so just take note on that. So now after you have done all the setups already and you already identified the security issues and you've already made sure that you want to make sure you have a cold wallet. Now, a cold wallet is very, very important. Having a cold wallet will save you in terms of being out of the game. Because in the event that you are hacked, the exchange is compromised, someone died, and then the person has, you know, all the coins and all the private keys. We all know what exchange is that, right? Shit happens in this space all the time, guys. So try to understand that you need to have your own a wallet that you own the private keys to. So if you want to support us, also you can also get the ledger from us as well in the links in the description below. Getting a ledger is very helpful because it gives you the opportunity to have your own private keys. When you have your own private keys, you are storing your crypto, and at the same time, it allows you to store a number of ERC20 tokens as well. Okay, all those things are also in our tutorial. How to set up, how to link up to your Ether wallet, you know, my Ether wallet, and then from then you are able to pump your ERC20 tokens, because sometimes those are not available on Ledger itself. But Ledger already has a suite of tokens that you can store, and usually what I would do is, after I'm done trading or investing, I will usually go into one of those tokens that Ledger already holds. Okay, so it's very, very straightforward, very, very simple, because the moment you lose your coins, guys, it will demoralize you. You will be out of the game. You will think that this whole space is a scam, but actually clearly I've already covered majority of the risks in this good part, this 15 minutes of the video already. So take note, this is very, very important. Go and get yourself a cold wallet. You can get from other cold wallet providers like Trezor, KeepKey, or whatever you prefer, okay? But I'm just telling you, get yourself a cold wallet, familiarize yourself with how to use it, and then from then proceed. Okay, now we have covered the very, very important security risk profile. Let's get into a little bit sexy stuff, okay? Now, I'm going to shift to share screen mode. Okay, so I'm going to give you an example of my trading. This is my trading account. It is one that I use for examples such as this, and I'm going to just cover the essentials first. Now, most exchanges, like I said, always will have all these nice things, giveaways and whatever, okay? It's good to know. It's good to know, okay? Naturally, this is to attract you, what campaigns are running. So whenever you join, whatever whether you're on Binance or whether you're on Binance or on Huobi, right? I have referral links as well, so feel free, if you haven't joined yet, just feel free to support us. Whatever you trade, you get a discount on your trading fees, especially if you use our referral link. And then if you're looking at trading and on a whole, usually these are the digital asset to asset exchanges that you will be using. So same thing, when you go through, you want to get to the heart of it. So the kind of markets that I use these days are only USD Tether. Very rarely do I use the Bitcoin or trade in Bitcoin, because I want to have one foot on the ground. Now, what does that mean? US dollar Tether is the longest standing stable coin. Okay, that means one USD Tether is backed by one US dollar. So it's very, very straightforward. It's very, very simple. Now, the unfortunate thing is that you cannot buy USD Tether from Coinbase. They have their own versions of their own stablecoin. You can't buy from Gemini, right? You're using US dollars buying BTC, or you're using US dollars buying LTC or buying Ethereum. Okay, and then from then you after buying, or let's say from Coinbase, you buy already, you have to transfer. Now, Coinbase doesn't have order books. You cannot set an order. Gemini, on the other hand, allows you to set an order. So at least you can place an order. Let's say I want to buy at 3,750. Right now, market price is 3,823. You can still set an order. Coinbase doesn't allow you to do that. You have to do it probably on their other version, right? Which is their trading version, which is possible. So right now, for if you're using Huobi, Binance, or whatever, right, that gives you additional access to more cryptocurrencies. Now, the reason why Binance and Huobi became popular, because they gave the market more access to more coins. If you notice, Coinbase, being one of the largest exchanges now in the world, okay, with an $8 billion valuation, are very slow. They want to only bring on very, very solid, credible projects. So that is why this is, of course, additional news aside, a little bit off tangent from the tutorial, but whenever there's a listing on Coinbase, it seems there is a pump across all the other exchanges as well. Okay, so this is one of the reasons why sometimes Coinbase, having a Coinbase listing alone already excites the market. okay, but they are definitely more conservative, which is a good thing. They are definitely more conservative, and they will definitely take a more stringent approach towards listing. Whereas I'm not saying that Huobi or Binance don't, but they're definitely more open, more aggressive, and they have teams that are actively looking for projects out there that have high ROI or even have high intrinsic value that can support the existing ecosystem, which is our crypto space. Okay, so now obviously when you look at the markets, you don't want to get overwhelmed. When you look at it, there's going to be USD, HUSD, BTC, Ethereum, and even trading on HT. Now USD Tether is very straightforward, is the stable coin. HUSD is the stable coin that was created by Huobi itself. Okay, BTC is very straightforward. That means whatever pairing against BTC, whatever pairing against Ethereum, and of course whatever pairing against HT. Now HT also has its own token, right? And that token serves on a few levels. One, it helps you as a trader to reduce your fees. But however, I wouldn't recommend using Huobi's because Huobi is just way too expensive. You can buy a point card to kind of offset the fees. But other than that, Huobi doesn't have the best program in terms of offers. Binance still has the best in terms of reducing fees. So I would highly recommend that. But the reason why I'm here, because right now I'm trading certain things on Huobi, and I would like to share that with you right now. So HP Index. Okay, so if you're someone who is an investor, right, you are like, oh Ryan, this is all too complicated for me. I really don't have the time to do any trading on a regular basis, but I want to get involved. So now there are indexes that are being created, and HP10 Index is the top 10 in terms of volume, okay, that are here on the HP10. So that means you can just buy the HP10 Index, right? And then from then it comprises of the top 10 coins that are listed on Huobi with the highest market cap value within Huobi. So usually they will adjust the top 10 based on the market cap. So that means if something else pops up, something else will take over its place. So just take note on that. And it's just a price, and the current price is 326.9, right? So if you say, oh man, I only know that going forward, you have this anticipation that going forward, I see that this market is gonna do well, and I want to invest in the top 10 coins, but I don't want to dedicate and individually key in orders. HP10 Index helps you with that. Okay, you don't have to worry too much. It adjusts itself. It's a weighted average, as you can see. So the weight here, 36%, 36.51% in BTC, 18.82% in Ethereum, Bitcoin Cash 5.16, HT 2.98, ETC 1.57, EOS at 19.97%, Ripple at 7.03%, LTC at 3.91%, and Tron at almost 3%, and ONT. So now here's another trick that I learned, right? So here's another trick that I learned. Being that this is the top 10 coins, right? And you want to be extra safe, you kind of look at the ones that are on the heaviest weightages over a certain period of time. So that means if you're someone who wants to take it to the next level, this is a pro tip. Okay, if you want to take it to the next level, look at the ones that have the heaviest weightages. Because an index, right, they are already managed by high-level analysts and people who already know how to trade. They are the professionals. So when they put a heavier weightage on that, right, what does it mean? Obviously, they have more confidence in those cryptocurrencies. Now, take note, naturally, the larger the market cap, obviously, the ROI won't be as fantastic because it takes more to move that particular crypto. It will take more money to move that crypto. So if you're someone who is moderate to conservative, you can just pick on the highest weightages, and then from then you tweak it yourself. Okay, you tweak it yourself. That means if you have $1,000, right, and you don't want to buy the index, you can kind of do your own. You can do your own segregation, right, of allocation of how much you want to put. So for example, you're going to be putting into BTC, Ethereum, and EOS, for example, or Ripple, right? So you put on the top 4, and that's it. Simple as that, right? That's one way. Now, if you're someone who is on a higher risk appetite, right, you fall under moderate to high, naturally you want to look at anywhere from smaller to mid-cap cryptocurrencies. So smaller to mid-cap cryptocurrencies, tentatively I would say that any range anywhere from 20 to 50 mil in terms of market cap is already considered quite small. I don't touch anything smaller because that's already very crazy already. So 20 to 50 mil, and then there's the 50 mil and above to 100, and then after that 100 to anywhere from a few to even a few billion, right? So this is the range. So all those things you can probably see in CoinMarketCap. But like I said, look at all these things from a fundamental standpoint. Nothing is guaranteed. Okay, this is just how we approach and how we continuously tweak in our Protégé group. Okay, so after you have determined that, okay, you are now looking at the fact that you look at the main. You can switch from anywhere from the 24-hour volume to the top winners to the top losers. Okay, so how people make determinations of trades and investments, okay, all these things we will share only in the Protégé group. We were not going to be teaching you all this. So right now, this is how we are determining our trades at the moment. This is how you're going to filter and look through your various cryptocurrencies. So interestingly, there's a CoinBook which gives you a rundown of what are the various cryptocurrencies that are out there within the exchange. So let's say, for example, if you are completely clueless on what is BTT, what is BitTorrent, you click on BitTorrent. From then it has a basic information to the white paper, right? Who recently purchased it. So that the Justin Sun recently purchased BitTorrent for $140 million. Right, I'm not sure why he did that. Obviously, I mean, I have my theories. You can watch my episode on why I feel that it's pretty redundant, and to me it's a money grab. But nonetheless, yes, you can just read. So the CoinBook gives you that and there's reports. Okay, if there are any reports by the team, and then after that, whatever particular news that will come out. So at the moment, none of that. Now contract is the new leverage. So some have it, some don't. Okay, so I have to do the verification, but I try not to use leverage. Personally, I'm not someone who likes to use leverage. Okay, this is something that I would try to avoid. So as you can see, there are also risk reminders. Don't serve for countries as listed, United States of America, blah 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 blah. Okay, so even Singapore is not available. So hey, too bad. But nonetheless, I'm not someone who likes to use contract for differences, or I don't like to use futures contracts, because I feel that at the end of the day, I want to be invested in the actual asset itself. Okay, so I do not touch derivative products for crypto, because they are already highly volatile. Okay, so this is now I'm going to go into the actual okay, so let me just share with you in terms of the balance. Okay, so I started out the account with 10k USD just to kind of play around, you know, with what I'm buying. Do not buy what I'm buying. Okay, I'm not recommending any of you to buy what I'm buying. This is just for tutorial purposes. I started out with $10,000, and right now I've built it up to $12,000. So it's a 20% return in less than for me. I started on the 19th of February, right? It is a fresh account because I wanted to give it more time, and I did a 20% return so far. Now, how did I do that? I invested in Huobi and Huobi token, right? That means the Huobi token and the Huobi token. That was what I wanted to buy because I was the most familiar with that. And to me, right? I was looking at the Huobi pool token because I feel that there's a lot involved in that existing ecosystem. So let me just share with you the charts first, and why did I decide to buy the Huobi token. I'm not shilling the Huobi token at the moment. As you can see, I'm already exited out of the position, but I'm just sharing with you that there are investment opportunities that are viable and it could work. I don't take this, there's no such thing as a recommendation right now. It's just more for educational purposes. Okay, so right now, okay, let me just go to the Huobi. So I use USD Tether for simplistic sakes, and I like to trade now, especially now, with small amounts. So when I go in with small amounts, right, it is very easy for me to manage the orders. Okay, so as you can see, why going in with $500 or less than $100 is actually very viable. Okay, so initially when the markets were not as vibrant, okay, you have this very long, flat, volumeless, there was nothing to do. Okay, there was honestly nothing to do. So to me, I'm a very patient kind of guy. You can safely say I was investing at that point. But the moment volumes start to get exciting, naturally I will always get out of the position. So this is something very unique to crypto, and I think a lot of investors cannot fine tune their strategy. Okay, because if you're someone who is an investor already, right, that means you're someone, okay, I don't want to think about anything. I don't care about what kind of entry. I just want to buy and I'll hold. So hence the word hodl. And that is why a lot of people got burned, because they didn't know when to take profit or when to get out. So my theory is very, very simple. If I am here, if I got in here, okay, I'm just chilling, just accumulating. I love these kind of things. But the moment we see some kind of movement drastically outside of my range, right, that means I have a buying range. So take note, you might want to write this down. Every single chart will show you a pattern. Okay, every single chart will show you a pattern. There is a certain buying range, and this buying range, right, is where you will feel the most comfortable if you're not a trader to kind of, we're not talking about traders, guys, okay, we're talking about people who are investing. You just want to keep it simple for yourself, and when you are going to dedicate or allocate a certain amount of funds, you want to find that range. If a crypto doesn't have a certain range, don't touch it. Okay, it becomes very risky, and if you haven't observed that particular cryptocurrency for a good number of weeks to months, don't touch it. Okay, that's why whenever we do any recommendations for trading, it is either a swing trade or a day trade to a weekly trade. That's it. Okay, now a lot of people love to get lazy and use these signals as per se as a form of speculation. So it's like, okay, there's a signal that's out. Let's get into it. Let's throw some money there. Let's see what happens. We advocate in our Protégé group that we are using these because we are trading it. We want to share it with you. But before you even decide to buy, can you turn off the phone, dear? Sorry, the phone is ringing. Give it a second, guys. And right now, when you do any swing trades, right? When you do any swing trades, okay, it is gonna be based on momentum and volume, okay? So and price action. But when you're talking about investing, right, you're playing for the long game, because I'm here for the long game. I'm not interested to participate. I'm not interested to participate if this particular cryptocurrency is going to give me a little bit of return. But however, if it suddenly just goes astronomically high, for example, let's say I was already accumulating during this period, okay, which I was, okay, and suddenly it does this, okay, I usually get out 70% to 75% of my portfolio, okay. And the reason why I do that is because every time there's a parabolic movement, usually it will always crash. Hence, you have this very, very long candle. It can crash on a few reasons. One, speculatively, it already wants to do whatever it needs to do. The other is BTC working unfavorably, where BTC starts to correct aggressively. So when you have the good thing about USD Tether is that when BTC starts going up, the price also starts going up. It tends to keep up. So that's why I want to have a better advantage as opposed to if I was trading a HPT BTC. If I was just trading HPT BTC, unfortunately, I need BTC to stabilize and trend sideways before there's a chance for my HPT BTC to start moving up. Okay, but if I want my coin to go up with two angles, one, now I have two advantages. BTC goes down, obviously this will take a hit. Okay, if BTC stabilizes, HPT will tend to have an opportunity to move up, or any kind of altcoin, at least if it's in US dollar tether. Now, when BTC goes up, that means if it goes up to 4,000, it may suffer on Satoshis, that means against the BTC pairing, but in terms of US dollar tether, it actually starts trending upwards. So say for example, if BTC goes up, say to 39 or 4,000, HPT tends to follow in terms of USDT value. But will it be suffering on the Satoshi level? Yes, of course, because now your BTC has gone up, your Satoshis will be affected. That means you're going to earn less when you take profit into BTC. Okay, so take note. As you can see, it gets very confusing, guys. So keep it simple. As a beginner, as a new trader, use stable coins first. After that, when you're very familiar and you're very familiar at looking at 8 decimal places, start. Then you can start, and that will take you a while. It'll take you a matter of months, by the way. Okay. So take note, there is also now the stop limit option. So the stop limit option allows you to put a trigger price and then after a limit price. So for example, if you are looking at buying a particular, let's say HPT, okay, for example, you want to buy, and your limit price is let's say, okay, let me give an example. So if the price goes below 3, okay, let's say the price goes below 3, okay, you want it to start buying at 0.00, sorry. Okay, so what does this mean? Okay, let's say I give you an example. Okay, so the limit price is 0.03, and after that it will stop at 0.28. So what this means is that the moment, okay, so let's put this in. Okay, when the price falls to or below 0.028, the order is triggered to buy at no, sorry, wrong. This is the other version. So let me do this. Okay, yep. So this is correct. Okay. So when the price falls, so what I'm trying to do is I'm setting a limit order. When it triggers, right? Okay, then I put in order. Why am I doing this? Okay, why am I doing this? This is a stop limit order. So when I do this, as you can see, right, this is a stop limit buy order. Okay, it is not on the order books. Okay, take note, it is not on the order books. So what happens is that in the event, because this to me is like a support level, the moment this triggers, only then will my 0.0028 order start. That means I only want to buy at this point. But because sometimes, right, the price can drop so fast and so quickly that it will trigger. So I want it to have a trigger event. So the trigger event is 0.003. And then after that, there will be a buying order that will be keyed in, right? That will be at 0.028. So that way, no one can kind of front run me. In that sense that, let's say if, okay, let me just cancel and give you an example. Okay, so I cancel. Okay, so can you see that, let's say I have an order here that I want to sell. Okay, I want to sell at 0.03745. So that means, right, I have an order that is keyed in at this price for this amount. The bots, right, these days, there are bots that are now trading that will cause the market to move against you or in your favor. Now, if there's momentum, obviously it will clip no matter what. But sometimes that will actually contribute to the wall. Okay, the wall is the sell and buy wall. So let me go and show you this. Okay, so my order is somewhere around here. Okay, I'm part of this wall. That means I want to sell an X amount of HPT at this price. Okay, so as you can see, 3745. So I'm around here. Okay, I'm part of this wall. Okay, it's 3745. Okay, so here, around here. Okay, so I'm part of this wall. Now there are people also that are buying, that are queuing up their orders. These are all market orders, by the way. Okay, they are already market orders, or they considered limit orders. So you can do a limit order as well. So a limit order is very straightforward. So let's say I want to do this. I want to use 25%, 50%. Try to key in a certain amount that you're comfortable with. So let's say I want to buy at 0.28. Okay, this is called a limit order. See, so very simple. I'm only going to be using 25% of my stack, and I'm going to key in my order. Now, these are just fulfilling orders only. It's just very simple. These limit orders, it hasn't gone through yet. Only when the price goes to 0.0028, then based on how much is available for sale at that time, will I then be able to buy my HPT at this price. Okay, so that's a limit order. So let me cancel first. Now, market order is just very straightforward. I don't care. I want to know what is the best price. I click and I'll buy. That means I'm going to use this amount and then buy up whatever is the market price. So at this point, market price is 0.003440. The worst, but however, you're going to get sold at this price, 0.003447. So let's say, for example, right, you are buying $2,220 worth. It doesn't show you how many units, which is quite bad. Okay, it just shows you how much you're planning to use to buy. And then in this case, if let's say, for example, this fella is selling 106,000 HPT. Okay, so this, okay, well, anyway, that was the best. Now this is the so-called the best market price. So you can see 3441. So if this gets filled up, and it will eat into a little bit of this, so it will average down. So personally, I never use market order buy. Okay, I don't like to use market order buy because I don't get the best price that I want, and at the same time there's potentially quite a bit of slippages. So slippages can be the difference between the bid the bid and offer. So this is the offer price, this is the offer price, this is the bid price. Okay, so that means, as you can see, there's this gap here. So 3441 and 3429, there's this gap. So that means you are being charged a slight premium that usually most people don't care about. So try to make sure that when you're buying, usually set a limit order or stop limit. So every single thing, right, every single order will be fulfilled at that price. Okay, that is one thing that I want to let you take note of. Now, in terms of cashing out, why did I cash out, right? It's very simple. Now, this is the part where you get a little bit technical. Okay, stick with me. So right now, right, I'm going to draw a trend line to show you the reason why I even cashed out, why I even took profit, and why having a little bit of technical, learning a little bit of technical analysis is very, very helpful. But when you do too much TA, you forgot that you are looking for the big gains. Okay. Now, no matter what, I will always have a stack of whatever favorite coin that I'm going to be holding. So we are going to be launching a quarterly report, and this quarterly report will be launching soon. Anyone who kind of purchases the 3-month membership, you get this entire report for free. And this report, right, gives an extensive coverage on the 3 directors. That means me, Orbiton, and Andy. What our portfolios, why we bought them, and our long-term view on it, because we are looking for the long term. We are not really that much so interested in the day-to-day 9 to 15%. Okay, that is not going to get you life-changing income or making you rich. Okay, for this to work, you're looking at the 2-year space, 3-year space, and you want to always keep sight of that goal. I think a lot of people enjoy the trading part because it's fast, but what happens is that you're going to miss the main upside. And you don't want to miss the main upside, because that's going to be the 5x, 10x, 1000x. That is the part that you want to be interested in, not the freaking 5, 10, 15%. Okay? Okay, so take note. So for example, right, this is a very good example of a bullish flag. Okay, this bullish flag naturally resulted in a breakout. And then when there was a breakout, obviously there were a few points that you could potentially take profit out of. So I was previously I purchased around this area, right? To me, it was either I cash out here, right? But then I had to do a rebuy anywhere within this flag, and because I saw that there was a formation like that. Now remember that why is that so? Because it came from an uptrend. Okay, it came from an uptrend, and potentially a breakout would always mean upwards as well. So the next thing is, how do you determine that this was going to sell down? Well, now there was a lot of selling pressure that happened, and this candle that appeared, okay, after this candle appeared, this was when the take profit started. So exits can happen anywhere from here to here. Okay, don't wait for the peak, guys. There's no such thing as waiting for the peak. I think the worst thing that any trader can do, any professional trader, right, will never wait for the peak and get greedy. Okay, so those are for noobs. Okay, I always pick the in-between. Okay, from there, after I allowed it to settle for a bit, because I saw that this double top was forming. This is not a proper double top, by the way. But when I saw this double top forming, I always allow things to kind of let the dust settle. When I let the dust settle, I looked at the new range. And so the new range was, as you can see, this wick. Okay, this wick was pretty sick, because this was when BTC took a shit. Okay, BTC took a shit to about 3,750, and that's when everyone started to panic. It dropped from 4,200 and it dropped to 3,750 in a single session. So this caused that to happen, and then after it recovered very quickly to 3,800, and then that's when you see the whole thing start to stabilize at 0.31. So did I re-enter back again? Yes, I did. I went back in at the 0.31 level, and then it did nothing much happened for me. I didn't get excited because right now there was a range, which I mentioned earlier. There is a range right now. So the buying part for me was anywhere from 3.1 to 3.2, and there was yet another opportunity to exit, unfortunately, and I couldn't sit in it. I exited anywhere from 3,690 to 3.7. I didn't catch the peak of the peak. Like I said, I will never catch the peak of the peak. Now there seems to be a formation here. Now this looks very, very favorable. If you zoom out, it looks very favorable right now. There seemed to be some upward momentum, although OBV obviously is now dropping, and then after that RSI has already kind of stopped dropping and starting to correct upwards. So let me just draw the lines again. Same thing. This is looking favorable. Then this is looking favorable as well. Okay, and this is on the 4 hours. Okay, so sometimes look at the longer time frame as well. Now on the longer time frame, same thing. Okay, on the longer time frame is looking quite encouraging, but okay, is there going to be enough volume? So look at the volume here and whether or not it will support. Okay, as long as the volume, right, continues to trend upwards. Okay, as long as the volume continues to trend upwards, RSI, by the way, can correct itself on a session basis. Sometimes people just take profit very aggressively because the order books are very thin. You can get hurt. So that's why you have to ask yourself, are you going to have a dollar cost averaging strategy, or you're going to go lump sum? Okay, these are the things that are so intense and extensive that you cannot have a one all fits all strategy. You always have to keep tweaking your strategy. It is not easy to say, okay, today since the indicators show this is probably what's going to happen. Yes, you base your entries and exit based on certain technical indicators. Fundamentals, however, usually take longer to play out. So when you're reading the particular project, let's say, for example, if you want to go and look at HPT's white paper and you see, okay, they're doing quite a number of things. By the way, HPT, they're focused on mining. They're providing mining services and at the same time technical support for any projects that are going to be built on the HPT or Huobi chain, right? So this was the purpose of the Huobi pool token. And a large part of Huobi Group, they just recently invested 50 million into a project called Thundercore, and you can look at that on Crunchbase, right? When a company has this kind of money to spend and they are willing to fund a startup, that happened only on 27th of February, by the way. 50 million, right? In a bear market, they're buying up companies. It just goes to show that's a clue for you that you want to start holding certain cryptocurrencies long term. Okay, not many cryptocurrencies have the money to buy up other companies. So if they are able to do that, that means they are really supporting and building up their ecosystem. Okay, so these are certain hints that I can share. I think the episode is already 1 hour long, so let's not go too long and don't stretch too much. Like I said, if you want to have further information or details on how to trade, how to invest, everything is in the links in the description below. CG Protégé is completely free, but however, CG Protégé Pro, right, you will have a 2-day trial to have an experience on what the CG Protégé Pro is all about, and if that's something that you want, you can upgrade your membership to CG Protégé Pro. But CG Protégé is free. It's for you to get information in a very safe environment, and from then you can get announcements, news, and trading recommendations from us. Okay, so that being said, thank you so much for watching. Thank you for joining this episode, guys, and if you liked it, please give a like to this particular video. Like I said, you also have the Udemy that is completely free. That is in the, when you join us, we will also send you the link. At the same time, also we're running a campaign at the moment. If you're interested in all those things, links are in the description. Subscribe to the channel, guys. We would really appreciate the support, and it helps us to create better content because we know that we're doing the right thing. And also remember, guys, this space is highly volatile. Whatever you do, always make sure that you have identified your risk profile, and at the same time, never ever overcommit and make sure you get educated with us today. All right, click on the notification bell so that you don't miss the next live stream or the next episode from Crypto Grinders. See you guys.